With stock indices up 70% since their March low, is the current rally justified? Can it continue?
I think you're right to point out we've seen an incredible rally, an explosive rally when it comes to global stock markets over the course of the past few months. You only have to look at equity market performance in the third quarter, the best we've seen in nearly a decade. So very strong. I think what we have seen over the course of the past few months is an increase in optimism and a decrease in pessimism. Remember at the start of the year, many analysts were potentially talking about a depressionary scenario playing out. I think what we've seen over the course of the past few months is the fact we're not looking at depression, but what we have been seeing is a short but relatively sharp recession, but also an increase in optimism. If you look at the forward-looking indicators, they've certainly become far more positive. And we think there are a number of reasons why we should be positive about the ability for stock markets not only to hold on to the gains that we've seen over the course of the past few months, but potentially add to them. What we do know is, of course, we've got unprecedented levels of fiscal stimulus in the system. We've got interest rates on a global basis at historically low levels. We also know that confidence has rebounded quite nicely with the stabilisation of the financial sector. But I think when analysing stock markets, when analysing the economy, you should also be looking at the inventory cycle. The inventory cycle can best be characterised as collapse followed by recovery. Our expectation is that we're now moved into the recovery phase of that, and that should be a strong boost to the demand. Along with the idea, of course, the major economies around the world will return to growth during the course of the third quarter. So a number of reasons to be optimistic that we can certainly hang on to these gains, as I said before, potentially add to them.
Oil is hovering close to $80 per barrel. What are your views on oil?
I think when you're looking at the oil price, we're certainly seeing it rebound quite significantly. Market analysts, of course, watch the oil price very closely indeed. It's very important in terms of the manufacturing process for transportation and also a key cost to consumers. Oil is often described as a lubricant of economic expansion. We also know that a high oil price can act as a tax on global growth. I think what we can say is that we're optimistic about the speed of the economic recovery coming through, very much seeing that driven by Asia, and therefore we know that that's going to be more commodity intensive than we've seen from recoveries in other developed markets. So on a supply and demand basis, you have to say that you can justify an oil price of around about $75 a barrel to the end of 2009 and be more optimistic as that recovery comes through and talk about an oil price in 2010 around $85 a barrel. But I think when analysing the oil price, the supply side of the equation is absolutely vital. We know that OPEC are relatively restrictive when it comes to its policy. We know that new reserves are often found in politically sensitive areas, the likes of Venezuela, Nigeria and Russia. There's a constant threat of weather disruption along with political disturbances as well, and they can all have an effect on the oil price. So potentially there is the room for a spike to come up, but on a simple supply and demand basis, $75 at the end of this year, $85 towards the end of next year.